So today I'm going to present a project that is I would say a stable coin that is based on algorithm. So algorithm stable coins. When people are talking about this, and different feelings rise from the bottom of their heart because a lot of people actually lost a great bunch of assets during the hype of algorithm stable coins. And I'm a victim too. I actually mined a lot on like basis and some other copycats too. And so I lost the face a little bit during that hype, after the hype. But most recently, I just find this protocol called TITI, and I think it's a great one with a lot of innovations there. And a disclaimer is that we are going to invest in this protocol. I'm not sure yet about the percentage or the check sizes, but we're very, very interested in this. Okay, so TT protocol is actually a multi-asset reserve stablecoin based on one of their new invention called Monopoly AMM. So yeah, I'll skip this solutions to existing problems because right now, like all the, I'll go very quick on this. So, stable coins they have like centralized, decentralized, a lot of problems like over collateralization. Stable coins like DAI and some others they have like low capital utilization. And if it's reserve backed, they have poor usage, they have stable efficiency. And right now, here it comes to the new TT protocol. Yeah. Okay. So the existing problem, yeah, I already talked about the existing problem. I'll skip this. Okay. So yeah, let me introduce this Monopoly automated market maker. So I would say the first time when I see this, I'm a little bit surprised because that is not the common AMMs we see in the market. So the MM actually, consists of two parts: the original tokens and the trading pairs, right? The counterparty of that trading pair. And here in this monopoly automated market maker algorithm, one of the trading pairs that is called the TIUSD, which is the algorithm stablecoin, is actually printed out exclusively by the protocol. So, which means that there's no other outsiders or other liquidity providers who provide a double paired a trading pair about both sides of the tokens into that liquidity pool. So actually, it's the protocol itself minting or printing those, I would say, fake US dollars. So the situation is kind of like this: a user who wants to use their assets such as USDC or Ethereum to purchase TIUSD dollars, which means sell the assets to the protocol. So they will mint a TIUSD from the protocol that is directly minted from the AMM itself. And when they buy it, actually, so when they sell it, which means that they sell their TIUSD back to the Monopoly AMM, and when it creates a kind of sorry, I'm finding the English word. Sorry, the overall circulating tokens of more, there's no more TIUSD circulating than the reserve. So the protocol will actually automatically burn that part of the TIUSD. So this is a AMM 100% controlled by the protocol itself. And let's talk about another thing is that when I firstly study about all the algorithm stable coins, I find out a very, I would say, a bug inside of every system. That is, if you are a country, let's say if you are a government, you want to print money, that money will based on some of the revenue streams or some of the, economy this country has. For example, you have taxes, you have like export import businesses with other countries. But right now, for every decentralized algorithm stablecoin before TT, you haven't seen any of the protocol revenue that could be the cash flow who actually back up the money they printed in. But right now here we have a ever, going up kind of a revenue inside the monopoly AMM, that is the spread, or I would say the spread inside the AMM. Let's say if a user who want to buy some TIUSD from the AMM, let's say if he spent $1,000 because of the spread, because of the fluctuation, actually he only gets TIUSD less than 1,000 USDs. And if he sells the TIUSD back to the protocol, actually he will get less USDTs actually, or USDCs from the protocol. So which means that all those revenues who can earn like from the protocol itself, the protocol revenue itself will accumulate and becomes the one thing called, sorry, I'm finding that yeah, that's the real part. Sorry about this. The real part means what I explained before is that if you buy from the AMM, the AMM will print money, print TIUSD for you. And if you sell to it, it will automatically burn the TIUSD from the market. And yeah, here we actually explain about the protocol reserve value or the protocol and the protocol added value. I just said that there's a revenue stream. Always the revenue stream will happen from the MMM protocol itself. Is if people constantly sells and buy from the AMM, it will create the spread, and also the spread will actually wins accumulated for the protocol revenue. So here we identify two different terms. One is called PRV and the other one is called PAV. So PRV will be the reserve value, which means that all the USDTs or USDCs or Ethereums who actually got the protocol got from selling the printed or minted TIUSD will become stays in the protocol and become the reserve of all the TIUSD tokens. And the added value is actually the protocol added value is the revenue stream actually just described, is because of it can be regarded as a tax for the protocol to adjust the TIUSD circulation, and it's because of the user's transaction slipperage. And those PAVs will be used in three different directions. Number one is to distribute it to the market maker, and the other is rainy day fund, and the third one is called protocol fee, and I'll explain protocol fees later. So about the market maker fund actually. So in a traditional market maker, for example, in a Uniswap or SushiSwap LP, you have to have both sides of the tokens and deposit it into AMM, and you will face a impermanent loss because of price going up and down. But right now here for the market maker fund, in the TITI protocol, you only need to deposit a single side asset, which is maybe USDC or Ethereum. And the protocol will print the other side, which is TIUSD for you as the oracle price, and help you to lock it down into the LP pool. And because of it's 100% reserve like collateral reserved by the backed by the US TIUSD, and the price slipperage will be little during all the transactions. And so which means that the LP here who actually give out the market maker fund give the one single sided the tokens will face not so much, let's say, impermanent loss or even zero impermanent loss in the future. So it will be a kind of a let's say single asset yield farming. So you can only deposit one single asset and then enjoy the PAV I described here. So it's a single-sided accumulated, tax, received from the whole protocol. Okay, And there's another very interesting idea they talked about is based on like the incentive system actually composing of two parts. The first part is actually this is the governance token itself. Okay, the TT tokens. So people who actually participate in the usage of TIUSD, let's say mint it or burn it, which means that sell it, buy it from the AMM or sell it back to the AMM, will actually got to mine the TT tokens, the governance token, and also the MMF participant, which is the single-sided, liquidity provider only provide one token, could enjoy the incentive of TT tokens too. And another one is actually everybody's doing this. This is the second pool, right? So actually incentive for TT with TIUSD Uniswap on Uniswap LP on Uniswap too. So another very interesting part they learned from the play to earn model is the use to earn model. So actually they learned a lot from X Infinity about the play to earn model, because I think they're the first protocol, first project who has a incentive for all the users who can use TIUSD as a stable coin outside their own ecosystem. So let's say if you use TIUSD to trade, to buy, and for example, to become LP on other protocols, let's say Uniswap, or you want to buy some develop your own protocol using TIUSD as a basic asset, you will earn the PAV I mentioned before. Here is the PAV here I mentioned before. Part of it will use as a protocol fee. So this protocol fee will be distributed to all the use to earn model participants. So people who trade it, who use it, who maybe they gonna trade it outside their ecosystem to buy some, let's say, NFTs or some others, or even to transfer their tokens to different, let's say, new addresses. They will get incentives from the protocol fee, which is part of the PAV. And that is to remind you about what is PAV. PAV is actually the tax, or let's say the accumulated tax the protocol earned from the spread from the AMM trading. Yeah, and they already did a stress testing. They want to ensure that the TIUSD could be restored to a peg price in very extreme, adverse market conditions. So they did a stress testing, which actually performs very well. So they use the rainy day fund, the PAVs, and also the loans. Like the first one is the rainy day fund. So rainy day fund is part of the taxes, the PAV. So if the rainy day fund is actually used up, they will use the PAV, the whole PAV actually to back up for extreme market conditions. If let's say all the two things actually lost their value, they still have the third thing, that is maybe they will have some loans from the, let's say, the LPs from the MMF, who anybody who actually deposit their let's say stable coins like USDCs or real assets like Ethereum into the market making fund, they will get loans from them, and they will actually give them a promise that is actually written on the smart contract, that they will use future PAV. Because if somebody is, let's say, has transactions, or somebody is trading with the TIUSD, there will always be PAV accumulated value onto that. So they will use like future PAVs actually to buy back and pay back the loans with a enough interest rate on the PMM value. So yeah, so today is only just a very simple, introduction of this model. I think it's very interesting because first is I think it's the only protocol I see on the stablecoin market has a tax that collected from trading of that AMM, and it's not in the way of trading fees or other like transaction fees. It's because of the spread or the slipperage the user has. The second one is that they have an incentive for use to earn or is for usage outside the ecosystem. So they encourage anybody who use their TIUSD outside the system, outside their ecosystem to, let's say, I just described that, right? So let's say transactions, buying other assets, even buy NFTs, or they will have a off-chain kind of computation on each of the epoch and to calculate different weights of different behaviors, and they will actually transfer all as part of the PAV, that is the protocol fee or the protocol revenues, to the users. And the third one is that I think is 100% collateral, and people don't need actually to worry about their TIUSD is unpacked, because they always can buy back and burn all the existing TIUSDs in the market, because it's all printed because it's all printed from a single monopoly AMM. There's nobody else actually is distributing the TIUSD. The fourth one is actually gives a very good opportunity for people who have, let's say, USDCs, stable coins, or other, let's say, Ethereum, to have a one-sided single token yield farming chance for them to stake their tokens, and it's risk-free. So I would say maybe after we evaluate all the codes, and after they finish their auditing, I think it's a great chance for us, for Aladdin DAO to actually mint or mine their tokens without any risks. It's just by depositing some of our stable coins, or some of our existing one single-sided assets. It's another thing is that actually it's a Chinese team. I would say a lot of people actually, no matter from China or from the West, actually have a hesitation on if the Chinese team can do a let's say very basic assets, very fundamental assets like algorithm stable coins. But I have my faith in the team, and I think they are brilliant mind. They have brilliant mind, and they are very, very, I would say, strict to themselves. And they already been testing this idea for more than half a year, and they're still not releasing their product yet, because they want to become perfect before releasing the product. And maybe as 7X will help them to do some of the, let's say, fundraising, and also the strategy and marketing side, to let more people know that the Chinese team also has brilliant, China also has a brilliant team to actually build something very fundamental and a very infrastructure level who can win some respect from all the DeFi users all over the world. Yeah, I think that's my presentation today. Thanks.